Hey guys, what's up? What's up, everybody? My name is Ruben Rodriguez from Tenacious Tribe, and here I am once again to host you on our This is the time when you expect me to say on our series of price action and technical analysis of trading assets. Not today. I brought something different for you guys today, which I hope you guys find useful and engaging and interesting for your trading, for your knowledge, for your information. What is it? The death cross chart pattern. What is a death cross chart pattern? Very simple. It's a chart pattern. Allow me the redundancy. A chart pattern where you have the short EMA crossing below the long EMA, which tells you that the market structure has shifted. For me, it's a trend reversal chart pattern, and it tells me that whereas the bulls were in command here, now we have a confirmation that the bears are in command here. Um, what else? What else? What else is there about this chart pattern? That was not it. You cannot go after 1 minute of this video, not at all. I have more to tell you guys about this chart pattern, the death cross. As you know, one of the reasons. I don't want to label it financial advice whatsoever. That's not what I'm doing here. But one of the reasons I think, and I've seen it in the charts, and I've back tested it, and it's time tested, and I've read it in reputable books and authors. And your best odds as an individual trader is to trade on the same side as the trend. Namely, if you have an uptrend, so you have a new higher high, new higher low, your best odds of profiting is to trade on the same, or to trade long with an uptrend, and to trade short with a downtrend. Which, by the way, look at how neatly this 10 EMA traces or trails the downtrend, or this one, or Roku, or Okta. So it's very satisfying to see that the price thoroughly respects the 10 EMA after this death cross. And what was I getting with this conversation of respecting the trend? Is that trends are very they last long. They're very difficult to reverse. They require a lot of capital to get reversed. So a lot of loss of momentum. They take long. Markets moving trends. And yeah, okay, that's another piece of information. Where am I trying to get here? That the first signs of a loss of momentum, of weakness of the bullish trend. For instance, look at this candle here. Look at these two candles here, and they're telling us that the bears are stepping into this market. Perhaps you're going to see the RSI losing pace. Yeah, there you go. It starts downtrending here. Um, More often than not, it still takes a long time for the price to actually start an uptrend, a downtrend, excuse me, or a trend reversal. Uh, Therefore, I like to use this death cross pattern and signal as a good delimitation of what a nice timing, what a good timing is. Because I mean, of course, you can go short here when you see. I mean, of course, you can go short, provided your strategy so says, provided this is compliant with your strategy. The first signs of weakness you receive from this market could tempt you to go short. Perhaps you're going to see here RSI divergence here also. This could tempt you to go short. This could prompt you to go short. But if you wait for more clues from the market, if you wait, for instance, for a death cross, which I deem as a last blow on this trend reversal story, um, then the odds are you're gonna be your timing at shorting this market is gonna be much better than just going short here and then waiting for 33 bars here, 33 months weeks. Excuse me, I'm analyzing the weekly time frame. Then waiting 33 weeks here to only then see the market crumbling, falling below, selling off. So using as a as a trigger, as a as as a last blow, as a last punch in the trend reversal story that we have here, that we can start constructing here. I don't know if there's a RSI divergence here. Let's check, but this could be one first hint. Yeah, there's a exactly as I suspected. There's an RSI divergence here. You see higher high on the price. This high is lower, is higher than this high, and you do not see the same behavior in the RSI. So you see a divergence here. You see that this higher here is low than this higher here. This tells us that there's a divergence between the RSI plot and the price, and which means basically that the bulls, which were on in command here, are no longer commanding this market. They're losing strength, losing momentum, and the bears are starting to step in this market. And the odds are a reversal could be about to happen. What else you see? You also see here, for instance, the 10 EMA getting receiving also an initial blow. This candlestick, this double candlestick chart pattern, which you cannot recall. I don't see it. I don't see it useful for us to recall all the candlestick patterns. But this Arami with this second bullish candle, especially the biggest bullish candle perhaps you've seen in a while here, are already. Let's see the candle size indicator. Are Yeah, look at it. Look at this candle here. So first above average, a lot by a lot above average bearish candle that we've seen in a while. These are really like first things that this market is losing strength. What you see then? You see then a candlestick breaking below the 10 EMA, 50 EMA in the daily time frame. 50 EMA is also a very important benchmark. It's followed by a lot of money professionals, and it works as support for the uptrends, for the prices during the uptrends. And you see that this benchmark or this important mark held into account by a lot of traders is no longer serving support to price here. Then you see another sign of divergence, another sign of weakness. So you already got three signs of weakness. And then what you see this. Oof, look at this candle. Of course, you see this candle piercing below both the 10 EMA and the 50 EMA on the weekly time frame, and this is massively bearish. But perhaps if you're more aggressive, you could already like go short here. Or I mean, I don't like to go short in stocks. Once again, I think it does not provide me the good risk to reward scenario, because I mean, if I go short, best case scenario I get 100%. Worst case scenario I lose virtually a limited amount of money. Um, I won't say I favor going short in stocks, but this could be a very nice exit trigger for a trend follower here, for someone who started following this trend here and is only willing to get out of the trade after the price crosses below the 50 mm the weekly time frame. But okay, we know what am I trying to get from this? When you see a reversal signs starting to happen, there's a whole buildup of hints that the market gives you as to what it's about to do, because you don't know for sure that this market is going to reverse. As far as you're concerned, this market could also be like consolidating here. This is a very weird consolidation. There's like really no chart pattern, but this could be a very ugly. If you see this in a chart pattern, by the way, this is very erratic price behavior it's a sign of a distribution at the end of an uptrend. But this could be also. I mean, it is not. It's not the first time it's happened. I think Tesla has produced something like this. Amazon, all the big ones, they don't produce too steep of downtrends like this. So they sort of consolidate here and then they break out, which makes these consolidations like continuation patterns. And so what I'm telling is, one, this is perhaps not the best timing for the bold traders out there going short, because they're still gonna have to wait a truckload of candles before the price starts its actual downtrend. And therefore, if they pay attention to the death cross, perhaps this is the best way to time or to trigger your short trend. If you're holding on the long run, I mean, if you have not left your long position here, which perhaps you shouldn't. But, here, when you see like undercut below a 10 EMA, it's sort of like a strong signal that the trend is weak. Then here with the RSI divergence, here with the undercut of the 50 EMA, then this is a sign that really got to get out of the trade. Death cross is really telling that this market is about to lose space, to lose the floor. And it's not always this neat. There was a lot of bearish pressure here. Let's look at Spotify, for instance. Spotify, that was also a bearish death cross. So death cross is always bearish, of course, but the price got back to where the sell-off started. I also like these setups a lot. Price loses strength here, loses structure here, gets back to the place where it was before, to the supply area. You see like You see like a bearish multiple candlestick pattern, and then the price just crumbles and falls and tracks the 10 EMA on the weekly time frame. If you had gone short here with a stop loss, say above the all-time high, for instance, which might have been like not inciting because the profit was not fantastic, although it was. This was just like giving you a 2 to 1 risk reward ratio, or perhaps your insight is beautiful, but yeah, if you let your stop loss here, then you'd be on the safe side. So to tell you what, it's not always as neat as you see in Twilio, Snapchat, Roku, Octa, which is very neat chart. Well, it's just like the respect this chart has for technical analysis is beautiful. Like even this chart pattern here, this symmetrical triangle with a breakdown, and this week trying to undercut above, and the bears pushing the price back below, and the sell-off starts, and it respects thoroughly the 10 EMA. Something similar happens with Roku. Look at our cuts below. There's here a small breakout in the lower time frames, but the price is rejected by the bulls, and the downtrend starts. Also see here a double top. To tell you what, same story. I mean, this is not a leading this is not a leading indicator. I'd say it's a lagging indicator, because the signs of weakness of this market, the signs of reversal, were already here. Like a very steep correction price action wise. Another bearish divergence here on the RSI. I'm pretty sure. Yeah, there it is. A very steep one. A lot of very big candles in this market. This is written like reverse all over it, or whether you cannot never be sure. Of course, if you're like a entrepreneurial, if you like to take risks, and if the market, even if the broad market, which is a sign I use a lot to try to push towards a little bit more on my side, is already like overextended. Perhaps it's nice for you to go short here when you see these candles here, and these bearish divergence on the RSI, and just keep your stop loss above here. um, if you're very entrepreneurial and if you like risks a lot, otherwise you won't get more clues from the market. And then you see your undercut below. You don't see like a very steep candle cutting below this 50 MA, but then you see a retest with this rejection weak, and breakout, and which undercuts the structure of this market and completes the double top pattern, and the price just crumbles. And yeah, excuse me for my English. I'm Portuguese. I try to speak it as best as I can, as good as I can. Sometimes the words don't come out right, but I mean, I hope you guys still understand the idea. And then you see like the price just thoroughly respecting 10 EMA, even creating here a small flag, another one respecting the 10 EMA. Look at how neat it is, and losing pace here. This is already like signs that there could be something sort of a reversal happening here with Roku. Pay attention to this market, but a very very neat chart, this one. To tell you what, okay, I'll not take this video to 20 minutes. I'm thinking, I'm thinking, but we can go through all of them, of course. So let's see. Snapchat. Okay, your early signs of weakness and reversal. Undercut below is a very sharp candle. Sun should already said, get out of this trade. But then you see the death cross here at the undercut from the shorter EMA below the longer EMA. 10 and 20 on the weekly time frame, and 50 and 200 on the daily time frame. Those are the benchmarks used. And you see the death cross. Look at what happens to the market. It crumbles. Death cross, market goes bust. Death cross, market goes bust. Death cross, and market goes bust. Spotify, a little bit sui generis, but it still does go bust with this death cross here. And if you are into this trade with your stop loss above all-time highs, then you'd have been on the safe side here, and still scored a nice 2 to 1 risk reward ratio, or 2 to 1 profit here. Uh, I don't want you guys to deem these charts as a certainty once again as a certainty that this does foreshadow a sell off a downtrend. There's no such thing as certainties in trading. These of course these charts were cherry picked because the purpose of this video is for me to convey an idea to you guys, show you how this indicator works. It does not work always. Look at this one. You saw also the same thing happening in this market. Although in this market, the price was the market was ranging. It was not trending. So I like to use this indicator only after a steep uptrend, and not in a ranging market where the 10 EMA and the 50, the short EMA and the longer EMA are like sort of crossing themselves and then interchanging up and below. This is a very good characteristic of a ranging market where this is not so neat, not so workable, not so useful. Um, what am I trying to get once again? Don't deem this as a certainty. No such thing as certainty in trade. There's probabilities. What can you do with the signal? Just use it, for instance, as an launch, as an idea. What happens if you pick up, for instance, all the small market cap stocks, for instance, just just isolate example. Just pick up whichever universe you feel it's enough to sort of validate your idea. European markets plus Asian markets plus American markets, or just Russell 2000, whatever. As long as it's broad and ample, and as long as it's broad and able to validate, and with big numbers, which will enable you to validate this idea, why not just picking up this hunch or this idea to run your own numbers? Don't trust me. I I mean, this is time tested. This goes in the books. This works, as you can see. But you need to know your numbers. This is so important. How can you tell? How can you tell your numbers? How can you tell this the next death cross you see after an uptrend is going to be? What should you expect? What's the best way for you to execute the trade? What's the best way for you to print your numbers out? How can you live peacefully and and stoically if you don't know which numbers to expect and how to comment this market, this trade? How many trades should you take? How many should you not? Or should you manage risk? uh, do it yourself, really. Like use this hunch, this idea to run your numbers and to try to understand if this is indeed as the books say, as the authors say, as the notorious authors say. Technical analysts and a lot of charts here give this hunch. Use the numbers, backtest this hunch, and see if the numbers are indeed correct. What do they say? Are they worth trading instead of a dollar cost averaging strategy, which is a much less demanding strategy and much more emotions regulating friendly whatever strategy? How else can you use this? Yeah, it is also obvious if you're like a trend follower. If you're a trend follower and you are holding a long position only and and following a trend, I mean, as of this moment, if you're not left already when the market got below the 200 EMA or 50 on the weekly, this is also uh, a very loud signal that you should step out of this trade. What else? If you're a short trader, more I like to take more risks. I do not recommend this at all. But I mean, if you like on the taking risk side, this is also a nice trigger for a short trend, just like the golden cross. I'll come back to it. Is for the longer side, for the long side. Oh else? I mean, those are the three keys in short. One, fantastic exit signal, a last resort techniques exit signal if you haven't stepped up already from this trade. For short traders, very good trading trigger for calling a market reversal. And and I mean, what else can it be useful for you guys? Just pick up this hunch, formulate your idea, and try to sort of understand how could you create a system around this fundamental idea, and run the numbers, check if they make sense, and prune it. And if it works, if you end up realizing it works, prune it, execute it, win, make money, and be happy. And that's all I got for you guys today. Hope you guys enjoyed it. Uh, And that's it. Tomorrow I'll get back to you with Occidental Petroleum technical analysis and price action analysis. Take care, guys. Nice having you guys. Cheers.